According to him, the bank had committed over $44 billion to infrastructure across the continent in the last 6 years in areas of transport, energy, water, and sanitation. He disclosed this when the United States Treasury Secretary Janet Yellen hosted G7 ministers and heads of multilateral development banks. The event was to discuss the scaling up of infrastructure financing. At the event, Adesina proposed 8 solutions to Africa's infrastructure finance gap. According to him, project preparation facilities were critical to developing bankable infrastructure projects, since one of the major challenges of infrastructure projects was moving commercially viable projects to financial close. He added that institutional investors, including pension funds, sovereign wealth funds, and insurance companies, had enough resources to scale up infrastructure financing from billions to trillions of dollars. He said this pool of capital is so vast that what is needed is only 0.03% of up to 0.04% to bridge the infrastructure financing gap for Africa. Adesina said since the government provided the largest share of infrastructure financing, it must improve the efficiency of public financing for infrastructure. According to him, government must focus more on attracting the private sector to infrastructure financing by improving the policy, legal, and regulatory environment to support public-private partnership investment in infrastructure. He added that there was need for use of local currency for infrastructure financing. Adesina explained that because foreign loans financed the bulk of infrastructure and the revenue streams were in local currency, this presented a high financial risk to investors. In his reaction, a financial expert, Mr. Johnson Chukwu, noted the gap in infrastructural development and spoke on how to get resources from sponsors, just as he stressed the need for the right environment for operation of public-private partnership in this regard.
For the first quarter of this year. And what that means that the economy is opening up, private sector is accessing credit. Of course, moving from a 35.19 trillion to a 35.37 trillion naira within 3 months, an increase of about 1.18 trillion naira. It's quite impressive given the fact that the economy was until not just investors or private sector operators are actually accessing credit from the banks. And I think the forbearance the central bank has extended also is also helping MATER, so that the banks are not running over customers for non-performing loans. They are ready to grant them some level of accommodation to allow them run their businesses and make money to be able to pay their loans. So that's one factor. The other factor you also have to recognize that the government is still a dominant player in the credit market. The private sector credit was only about 28% of total credits extended in the first quarter of this year. Total credits extended was about 4.17 trillion naira, of which the private sector only got 1.18 trillion naira, just about 28.2%, while as public sector got 2.99 trillion naira, which means public sector accounted for about 72% of the credit that was extended to in the first quarter of this year. So we still have a public sector dominance, which is not too good for the economy. Have electronic payment, electronic receipt of funds, and that has reduced the need for cash or the currencies, even in terms of banknotes. So when you have higher velocity, then it compensates for a decline in currency circulation, because what we're seeing is higher transaction volumes going on through the future platforms. As elections approach, that might reverse, because unfortunately for Nigeria, we are still dealing with a situation where some of the election-related disbursements must go through cash. The polling agents, the campaign agents, a lot of times they are now paid. They are paid in cash. Particularly the campaign agents, the crowd that follow the politicians around are also incentivized in cash. The politicians now go and buy some food stuff and all stuff like that, and a lot of payments are made in cash. And you also have to deal with the under the table payment that take place pre or during the election periods. So you may see a reversal maybe towards the end of the year. Will shape the decisions of the Monetary Policy Committee. Factors like inflation rate, we saw inflation at I think 15.92% in the month of March. That has been a two months increase we had about 15.6%, and then we moved to 16 in January, 15.7% in February, and then 15.92% in March. And the pressures are still on, so that would be a factor to consider. We have talked about the state credit expansion to the private sector, which means we should expect stronger economic growth. IMF is already projecting the Nigerian economy will grow by 3.4%. So the Monetary Policy Committee will look at how do we encourage growth to be sustained, at the same time moderate current trend in inflation.
The value of Nigeria's international trade deficit rose by 175.13% from $152.94 million in January 2022 to $420.79 million in March 2022, according to data from the Central Bank of Nigeria. The International Trade Summary on the CBN's website shows that the total 2022, with imports at $14.77 billion and exports at $14.01 billion, showing a total trade deficit of 764.69 million naira in January 2022. Export was $4.74 billion and import was $4.89 with a trade deficit of $152.94 million. The value of the trade deficit increases further in February 2022 to hit $190.96 million, with export at $4.70 billion and import at $4.89 billion. A massive increase is recorded by March 2022 at $420.79 million trade deficit, with export at $4.57 billion and imports at $4.99 billion. The CBN Governor, Godwin Emefiele, had said in June last year that the country will cut down its import bill in the first quarter of 2022, particularly with the functioning of the Dangote refinery, which will reduce Nigeria's oil import. He had said, of course, for petroleum products, by the time the refinery goes into production by the first quarter of next year and the petrochemical plants, we will have reduced our importation by about at least close to 35%. However, Nigeria has failed to cut down its import bill and the Dangote refinery is yet to be completed and operational. The Nigeria Economy Summit Group, in its latest report titled Reforms Towards Resolving Foreign Exchange Challenges in Nigeria, highlighted the downside of the worsening trade deficit. According to the NESG, Nigeria is greatly inclined to external borrowing through Eurobonds and multilateral loans to push up external reserves due to the declining trade balance position. The report says, owing to the deteriorating trade balance position, the country is increasingly exposed to external borrowing through Eurobonds and multilateral loans to shore up its external reserves. In 2021, the trade deficit widened to 1.9 trillion naira from 178.3 billion naira in 2020. The country had persistently recorded a trade deficit since the fourth quarter of 2019, when the land borders were shut. However, maintaining a trade surplus consistently coupled with adequate inflows of foreign investment will contribute significantly to improving the net flows of forex through the economy, which crashed from $100.8 billion in the first three quarters of 2014 to $44.5 billion in the corresponding period of 2021. The report further disclosed that the huge dependence on imports has limited the CBN's ability to effectively manage the demand for foreign exchange. In its report, the group said, meanwhile, the massive dependence on import has constrained the CBN's ability to manage forex demand by prohibiting certain commodities that could otherwise be produced locally from accessing forex at the official market since 2015. The result of this policy action has heightened demand pressures in the parallel market, leading to a wide gap between the official exchange rate, now the I and E window exchange rate, and the parallel market exchange rate. The parallel market premium averaged $104.7 in 2021, 64.9% higher than the average premium of $63.5 in 2020. Meanwhile, despite the ravages of the COVID-19 pandemic, the Nigerian banking industry is still resilient and strong to support the country's economy. The Central Bank of Nigeria Governor Godwin Emefiele has said. Mr. Emefiele, who spoke at the end of the Monetary Policy Committee meeting in Abuja, said the various interventionist activities of the Apex Bank helped to significantly mitigate the impact of the COVID-19 pandemic on businesses and households, as well as reduce the level of contraction in the economy. The Nigerian economy grew at about 1.87% in the first quarter of 2020. However, following the outbreak of the pandemic and its devastation of the global economy, analysts projected the Nigerian economy to contract by about 7.4% in the second quarter. The gross domestic product report published by the National Bureau of Statistics early this month put the contraction at 6.1%. The impact of the CBN interventionist activities has been positive, without which the positive GDP growth recorded in the first quarter of the year prior to the pandemic would not have been possible. Neither would the somewhat reduced contraction of the economy to minus 6.1% in the second quarter against projections of over minus 7.4% have been possible, Mr. Emefiele added. On the back of the pandemic, the CBN governor said the Apex Bank decided to release the interest rate on all CBN intervention facilities from 9% to 5% for 1 year to help people and businesses devastated by the crisis. He said all the interventionist activities were part of the effort by the CBN to find ways to reflate the economy to enable people who lost their jobs and companies not able to pay their workers' salary to come back to business and survive. The value of new cash deposits attracted by banks to their vaults in the last 1 year rose to 6.69 trillion naira. The Central Bank of Nigeria has said. The Apex Bank Deputy Governor Financial System Stability, Mrs. Aisha Hamad, who broke the news, said commercial banks received additional 6.69 trillion naira new deposits from depositors between end February 2021 and end February 2022. The total deposits in bank rose from 32.69 trillion naira in February 2021 to 39.38 trillion naira in February 2022. Creating 6.69 trillion naira deposit growth. In a personal note to the Monetary Policy Committee members posted on the CBN's website, Hamad said the financial system remained resilient and continued to provide significant support for domestic economic recovery. Data provided by the CBN workers showed stability in broad financial soundness indicators and sustained improvement in asset quality alongside growing credit to the private sector. According to her, capital adequacy as at February 2022 was at 14.40%. Industry liquidity was also strong at 43.5% over the same period, while the non-performing loans ratio declined further to 4.8% in February 2022 from 4.94% in December 2021. Hamad said the state of the industry reflected the case-by-case review of regulatory forbearance, effects of the global standing instruction policy, and sound industry risk management practices. Notably, total assets rose to 62.01 trillion naira in February 2022 from 52.32 trillion naira in February 2021, while total deposits rose to 39.38 trillion naira from 32.69 trillion naira over the same period. Continuing, she shared the bank's credit to customers also increased by 4.13 trillion naira between end February 2021 and end February 2022, with significant growth in credit to manufacturing, general commerce, and oil and gas sectors. The continued growth in credit, particularly to output-enhancing sectors, is expected to further support economic recovery. However, sustained regulatory vigilance is required to mitigate any potential crystallization of credit risk in the financial system from lingering macroeconomic risks. In related development, Nigeria's diaspora remittance inflow is set to increase to $29 billion in 2022 because of higher food prices and the continued adoption of official bank channels, according to the World Bank. According to the Global Bank, migrants from the country are likely to send more money home to help with the hike in the prices of staples. The bank disclosed this in its report titled Migration and Development Brief, A War in a Pandemic, Implication of the Ukraine Crisis and COVID-19 on the Global Governance of Migration and Remittance Flows. It stated that remittance flows to low and middle-income countries are expected to increase by 4.2% to $630 billion in 2022. It said, with risk weighted to the downside, there are several factors that support a view for continued, though more moderate, 7.1% gain inflows to sub-Saharan Africa in 2022. Momentum for the use of the official channels in Nigeria should sustain an uptrend in the year, with inflows reaching $21 billion, though economic activities is likely to ease in the United States and Europe. Fundamentals remains positive for continued gains in remittance flows to the remainder of Africa, as the influence of altruistic motivations that were demonstrated in Africa and South Asia during the peak pandemic years will likely carry over to the period of sharp increases in staple food prices. The World Bank said remittance inflow to sub-Saharan Africa was $49 billion in 2021, with Nigeria contributing $19.2 billion to the total inflow. It said the use of informal channels to transfer money to the region caused a 28% reduction in inflows in 2020. It added, in 2022, remittance inflows are projected to grow by 7.1%, driven by continued shift to the use of official channels in Nigeria and higher food prices. Migrants will likely send more money to home countries that are now suffering extraordinary increases in prices of staples. The Global Bank stated that the Naira for dollar policy, which was an attempt to return remittance to former channels of the Central Bank of Nigeria, helped boost inflows by 11.2% in 2021. It added that the stabilization of the Naira against the dollar within a range of 410 to 415 per dollar over the last year also contributed to the pickup in recorded inflows. It further stated that the increased stability of the Naira and increased use of the e-Naira will help boost the nation's chances of achieving $21 billion in remittance for 2022. In another development, the federal government says it is targeting a stronger and bigger economic integration through gas exploration. The Minister of State for Petroleum Resources, Tim Silva, said this at the meeting of the Committee of Ministers of the West African Gas Pipeline Project in Abuja. He said the meeting was important as West Africa geared up to become a critical player on gas at a point when the world was scrambling for the product due to Russia's invasion of Ukraine. He noted that the West African gas project was true proof of economic integration and cooperation in our sub-region. The minister pointed out that the gas project was aimed at fostering economic development and promotion of integration among ECOWAS states through cross-border natural gas transportation. He further said that since the pipeline project's completion in 2011, there have been several successes, including improved gas availability and Takora-Ditema interconnection project, which had significantly increased gas flow through the WAGP. The minister noted that there had also been a lifting of force majeure that was in place by Nigeria Gas Company between June 2013 and October 2020, as well as the reforms of the access code to the WAGP network code. He noted that the ongoing amendment to the WAGP Act and the WAGP regulations will give a licensing power to WAGP authority to oversee the activities of the shippers as it related to the WAGP, saying that this was an important achievement. He said more achievement will be recorded with collaborations by all parties.
We have a lot of gas in this country. 260 CF of gas, trillion cubic feet of gas. That is our gas reserve. Already discovered gas reserves. 206 trillion cubic feet of gas. And all these 206 trillion cubic feet of gas was found while looking for oil nobody was actually going looking for gas and found gas. They were always looking for oil, then they found gas. And in that process of accidentally finding gas, we have found up to 206 TCF. So the belief is that if we really target to look for gas, dedicatedly look for gas, we'll find up to 600 trillion cubic feet of gas. So gas, we have not even utilized it. We have not even used gas to drive our cars. We have not even used gas to generate electricity. We have not used gas to even do our fertilizer plants. We have not used gas to do our petrochemical plants and our methanol plants. And yet they say, okay, now you should abandon this thing and move to renewable. So what we are saying is that, yes, they are in a position to move to renewable. They use coal to produce their electricity. They stabilize their electricity and then use crude oil to stabilize the electricity in their areas. And their people have electricity, at least everybody. We have a situation in Nigeria where our people, a lot of people do not even have access to electricity. Look, wait for us when we get that base load. When our people are able to also get to that point where we are comfortable and everybody has electricity, then we say, okay, then it is time for us to move to the next level. That's why we are saying that this transition, we are using gas as a transition fuel. How much carbon emission are we producing in Nigeria? In the whole of Africa accounts for just 1.something% of global warming. So what we are saying is we will transit. We agree, but let us try and also use the gas that we have. Let us try and get the benefits from the gas that we have. And then from there we will transit to renewable fuels.
The Nigerian Export Promotion Council has disclosed that the Federal Executive Council has approved the sum of 375 billion naira as an export expansion grant for Nigerian exporters. Speaking at the weekend, the Executive Director of NEPC, Dr. Esther Yakusak, explained that the grant is aimed at boosting the capacity of exporters in the country. According to him, to boost non-oil export, the federal government has just approved the sum of 375 billion naira as export expansion grant for exporters. The grant is for all exporters that apply for the funds in the time past, adding that the money will clear the backlog from 2016 to today. Yakusak also said over 285 exporters were to benefit from the grant. He also added that the approval for the fund is going to be taken to National Assembly, and of course, about 285 exporters are beneficiaries from the grant.
And we are going to bring up more initiatives. For example, from National Conference, we are about to set up a project called Exporters Handholding. What we intend to do is to pick up new exporters. They've just registered, they don't have an idea of what it is to export. We are going to match-make them with all exporters to train them on the fiscal aspect of non-oil export, on what to do, the rudiments, the procedures, fiscal procedures to ensure that they export. So that's part of the things we are doing. And I need to mention this, that it's like the federal government also to boost non-oil export, the Federal Executive Council just approved the sum of 375 billion naira as export expansion grant to all exporters that apply for export expansion grant. And that means the backlog from 2006 to date has been cleared. And so exporters will expect that any month from now, 375 billion naira approved for the export expansion grant by the Federal Executive Council. Right now, it is going to be taken to the National Assembly for assent. And of course, about 285 exporters are beneficiaries of that EEG as at now.
In an effort to improve private sector participation in the agricultural sector, the federal government disclosed that it had designed investment incentives to support high-level private sector participation in the sector. Some of the incentives include tax holidays, exemptions, and reliefs, specific government policies based on the company's performance and relevant international treaties. The Minister of Agriculture and Rural Development, Dr. Muhammad Mahmoud Abubakar, stated this in Abuja while speaking at the maiden edition of the National Agribusiness Stakeholders and Investors Summit and Nigerian Farmers Agribusiness Award with the theme Promoting Agribusinesses for Sustainable Agricultural Development in Nigeria. The minister, while urging Nigerians to invest in agriculture, said the agro-industry is experiencing revitalization with dedicated federal government policies towards encouraging farmers and investors, as well as growing the nation's gross domestic product, reiterating the government commitment towards industrializing the agricultural sector for increased productivity, efficiency, and competitiveness across local and international frontiers. He said the sector should be seen as a business platform and avenue for investment that will sufficiently satisfy the socio-economic needs of its practitioners and grow the nation's economy. Abubakar emphasized that the ministry is committed to regularly engage relevant stakeholders in both the public and private sectors of the economy with noble and novel ideas to move Nigeria's agricultural economy forward. He disclosed that the federal government is integrating food production, storage, food processing, and industrial manufacturing to establish the linkages necessary in the agricultural commodity value chain. He also informed that the federal government was investing in the development of additional 10 large-scale integrated rice mills across the country with a combined minimum capacity of 320 metric tons per day, which when completed will enhance Nigeria's self-sufficiency in rice production.
Hello out there. What business are you into? How have you been able to finance your business? Is your business affected by the inflationary trend? Are you thinking of expanding your business outfits? Are you in need of information on the economy, stocks, financial and money markets, dividends, and the likes? Business and Financial Matters every Monday between 2:30 and 3 p.m. on OSBC Television.